As the U.S. session begins, the pound versus U.S. dollars trading to new session lows after trading up and down in earlier Asian, Pacific, and European trading. For the euro versus U.S. dollar and the dollar versus yen, it's still stuck within its trading range from the Asian and European morning session. I'll talk about the technicals that are driving each of these currency pairs to kickstart your U.S. trading session in this video. So let's get started. Looking at the euro versus US dollar on the 4-hour chart, this swing area here between 1.1730 and 1.1742, along with the 100 bar moving average on the 4-hour chart. You can see the price action has been above it and below it in trading here today. On the downside, we have been able to, for the most part, hold support against the lower end of that range at 1.17303. If we do move below that level, and we are below the 100 bar moving average currently at the moment, tilting the shorter term bias a little bit more to the downside. If we move below this 30 level, then the 38.2% retracement of the move to the upside from the it looks like the August 1 low to the high price that we saw in the month of September. That would be the next key target of 1.1717, and then we start to look toward the 200-hour moving average of 1.17025. That 200-hour moving average is near the high of what I had outlined as a swing area down to 1.16924. So there's levels that need to get to and through in order to increase the bearish bias, but the bears are trying to take a little bit of control to start the U.S. session. Of course, when the euro moves lower, the dollar moves higher, and we saw a big move to the downside in trading yesterday in the U.S. dollar breaking below this swing area through here, which was a ceiling through the month of July and into September as well, before trading above and below it, trying to extend to the upside. So sellers are making a play. We'll see if they keep that momentum going. Taking a look at the dollar versus yen next. This currency pair moved higher yesterday in the process, broke above its 100-day or 200-day moving average. That's the green line in this chart. As you can see in trading here today in the early Asian session, the price moved down to retest that moving average, only to find support buyers, and it has since pushed to the upside. Now, admittedly, the price is up and down, consolidating below the high price that we saw late yesterday as well. So there's not any discernible trend in the price action today. However, getting above that 200-day moving average and staying above that level is key for this currency pair. We are trying to extend above the 61.8% retracement, just below it. Actually, we're just a little bit above it right now at 148.82. That 61 comes in at 148.819, so just above it, as you can see. If we do get above that level, then I would start to look toward this high right here and this high right here, along with this high right here. This area between 149.12 and 149, I think it's like 19, is the key level to get to and through. Back here, when the price broke above it, we came up to that 200-day moving average, found willing sellers, pushed down, and then broke above it here with momentum to the upside. This is going back to early August before falling below that level and running to the downside. So this area right here is going to be a key target on the top side. The buyers are in control above the 200-day moving average. As long as they stay above that level, we should see further probing to the upside for the dollar versus yen. Finally, take a look at the sterling versus US dollar. As mentioned, this currency pair is trading to new session lows after trading higher and lower. Looking at the 4-hour chart for this currency pair. In trading yesterday, we fell below the 100 bar moving average on the 4-hour chart, the 200 bar moving average on the 4-hour chart, the 100-day moving average, and also below this trend line here, and stay below that level at the high price today before rotating to the downside. So in addition to the 50% retracement level and also this swing area in play. So there's a lot of stuff in this area, probably down, let's say the 50% retracement up to the 100 bar moving average on the 4-hour chart, 134.63, 135.26. So all that was broken yesterday and stayed broken in trading here today. So that is a more bearish bias here for the pound versus US dollar. If the price is going to go higher, the close risk for this pair would be to get above the 50%, get back above that broken trend line, get back above this swing area through here, Absent that, and we'll start to look back down toward the broken 38.2% retracement of this move to the downside, get below that level when we start to look toward this swing area through here, and then the low price that we saw in trading 4 weeks ago down here at 133.607. So sellers in control in the pound versus US dollar. Stable at 50% retracement keeps that bias firmly entrenched to the downside. So that's my look at the three major currency pairs to kickstart your U.S. trading session. My name is Greg Mikulowski. Good fortune to trading. Bye-bye now.